G'day guys, Hadley here, New Zealand property buyers. Hope this video finds you well. So what I wanted to cover off today was, should I buy now or should I wait for the market to crash? Now, there's some things we need to take into account when we're purchasing property, and this is regardless of whether the market's going up, down or sideways. And it comes back to something I cover in nearly every single video. Does the property pay for itself? And does the property pay for itself at some slightly stressed or stress tested, should I say, interest rate? So as the old adage goes, the best time to buy a property was 10 years ago. The second best time was today. So the thing that we need to look at and be cautious of is the property that we're buying. With the market at the moment is a little bit turbulent, but we need to make sure that we're not overpaying for property, that we've got secure tenants, and we just need to be mindful that the areas that we're buying in are stable. So we're not going and buying something in a small little hick town in the middle of nowhere because it's a cheap property. We've also got to remember that good isn't always cheap and cheap isn't always good. So with that, when we're going and we're looking at properties at the moment, we've got more options, so we can be more selective. And also too, this is where negotiations come in fairly handy, or we can get back to negotiation as opposed to sort of 12 months ago where there was very limited stock on the market, where agents were saying, look, this is the price. If you like it, great. If you don't, well, that's okay. Someone else is going to come along and pay that, if not more, for the property next week. So when we're looking at purchasing property in today's market, we need to make sure that we're negotiating, that we're getting the right price for the property. And the other thing that we're going to start seeing a little bit too is from a valuation perspective, and the great opportunity with a slightly declining market is that when we're purchasing property at today's rates, when things are looked at from a valuation perspective, they're always through previous sales. So as a market drops down, valuers are fairly cautious people at the best of times. But if we're buying a property today, the comparable data that we're looking at is from sort of 2 to 3, 60, 90 days behind. So we're potentially also going to start seeing some gaps in valuations between where we're buying the property today and where the valuation comes in at a later stage. Once the market starts to flatten out and normalizes or levels out, should we say, then valuations are going to come back closer to purchase prices. And then once we head back up again, when we look at valuations, we're always looking at lag data. So when that value starts to creep up again in the market, and the valuations will trail behind it. So something else to bear in mind, good opportunity with that. Make sure that your properties cash flow, make sure that they pay for themselves, and also to make sure that you're buying in areas that you know are going to have demand. And there's a lot of great websites that you can look at for that, rather than just sticking your finger to the wind and going, I think this is a good house, we should just buy it. Enjoy the rest of your week. Happy house hunting, and talk to you guys soon. Thanks, guys.